PayPal stock. This is a stock I'm buying very heavily right now. This is my number one focus in the stock market as of right now. Okay, I love all these stocks, so I'm going to share with you here today, but this is my favorite one of the bunch. Okay, and that's why I put it number one here today. Okay, so PayPal is a stock that's been hit very, very hard recently. Before we get into all the reasons I'm excited about the business, I want to give you the two main reasons why this stock is down so much, okay? Because it looks like the biggest steal deal in the market probably since Meta last year, right? When Meta in the fourth quarter dropped all the way down to $88. And if you're wondering where Meta shares are today, it's about $280, okay? And that's in about a 9-month span or so. But in terms of PayPal, this stock has gotten hit very hard for two reasons. The first is there's a service that's about to be launched by the government called FedNow. Okay. FedNow service is a new instant payment infrastructure developed by the Federal Reserve that allows financial institutions of every size across the U.S. to provide safe and efficient instant payment services. Through financial institutions participating in the FedNow service, businesses and individuals can send and receive instant payments in real time, around the clock, every day of the year. Financial institutions and their service providers can use the service to provide innovative instant payment services to customers, recipients that have full access to funds immediately, right? And this service is going to launch July 2023. So guess what? It's launching this month, right? So everybody's looking at this. This is a huge, what is seen as a huge risk factor for PayPal stock. Now, what is my opinion on this? This is probably the top question I've been getting recently. What is my opinion on this FedNow? Okay, my opinion is, when have you ever seen the government compete with private sector and beat private sector? It doesn't happen. Okay, government launches a lot of things. I'll give you just one of many examples. The tax industry, right? The tax industry. The government, the IRS gives you free products to use, and hardly anybody uses them. Everybody goes through H&R Block or through Intuit, or has private people do their taxes, right? Actual tax accountants or other corporations, right? And so the IRS gives you some tools, but they're just not very good tools, just to be quite frank. And so people go to the private sector for running their taxes. And you can look industry by industry, and there's almost always government options available in so many different spaces. But at the end of the day, the government just, let me ask you, do you have a lot of faith in the government launching any products, okay? Anybody that's been around the block a little bit knows that no, okay? The government just doesn't do these things very well. They launch it, it's a big risk factor, and people fear it. But at the end of the day, you're not going to beat the private sector. The private sector, because they're incentivized differently, right? And they have a money motive behind them, they just always outcompete the government, okay? And so that's my opinion on this FedNow. No, the great thing about PayPal is it's trading at very silly valuations right now. It's trading at a forward P of 13 right now, okay? So what does that mean to you when you see a forward P of 13 on a stock that expected to grow, let's call it EPS of, we'll see, 20% or so, if not well over 20%. When you see something like that, you got to understand, this basically puts a floor under PayPal stock now at this point in time. So when the stock is trading that cheap, if PayPal was trading at a 40 forward P right now, or 50 forward P, then you could say, well, there could be a lot of multiple compression in the stock, and maybe it goes down to a forward P of 20 or a forward P of 15 or something like that. When you're already trading at these, bottom basement prices, let's just call it that, and you got a forward P on your stock under 15, which is substantially below the market, I mean, my gosh, all you need to come through is with halfway decent numbers, and you're slam dunking all the way, okay, across the board. So that's a beautiful thing. It makes for a situation where there's massive upside in the stock, and there's actually very little downside in a stock like PayPal for, in my opinion, at least the next couple years here, okay? Valuation. Palantir is currently trading at a 1-year forward P of 61, which corresponds, by the way, yeah, I don't think that 4P is accurate whatsoever. I think that's far lower than that. That's just my opinion. We'll see you in the numbers over the next several quarters, which corresponds to a 12.3% premium to the average 1-year forward P of 54.9 since 2022. Personally, I believe the positive business momentum trumps a slightly premium valuation. I think so long as Palantir surprises the street on its operating performance, the stock will continue to outperform. Yes, I also don't think this was relevant. To be honest, Palantir just got to profitability. So when you're coming from a company that's a massive money loser to starting to make infant stage profitability and then start to ramp this baby in a major way over this next few years, I don't even think it's relevant. Just to be honest, trailing 12-month PEs, forward PEs, even price to sales ratios just aren't relevant when you got a company that's flipping to actual profitability, in my opinion. Okay. Risk. I identified 3 key risks with the stock. Delays and cancellations in product execution. Yes, that could certainly be a risk. A faltering in the TAM gap net income route to profitability. Certainly, that could be absolutely a risk factor, right? S&P 500 inclusion is not guaranteed. Sure. I can tell you it's looking pretty darn good. I can tell you that, based upon Palantir's market cap, based upon, the profitability coming in and what I think is going to come in this next few quarters. I think we're looking, I don't, it's not in the bag, but I would say if I had to put odds on it right now, 90% we're in the S&P 500 by this time next year. 90%. I think, yeah. I would say 90% odds. We're in the S&P 500 by this time, yeah, next year. Let's just put it that way, okay? Conclusion. I missed the initial run on Palantir as I had a neutral hold rating on the stock. This has led to an opportunity cost of 61.4% alpha move on the stock. After reviewing the Q1 fiscal year 2023 earnings call in the company's AIP con, I gained a lot more confidence in the growth momentum for the company, particularly in the U.S. commercial sector. Furthermore, I think the end of fiscal year 2023 is setting up as a nice catalyst for the stock, as the company would then become eligible for inclusion in the S&P 500 index, which would attract greater institutional money and a lot of passive flows through instruments such as index funds, such as the Vanguard, VU, and a million others, right? My thesis places some trust on management's commentary. However, the data shows trust is well earned, as management has consistently delivered positive surprises for more than 10 quarters now. I recognize the valuation on a one-year forward P basis is slightly high premium since the start of 2022. However, I think so long as the company continues to deliver and surprise the positive business momentum, the key risk for the project cancellations and hiccups to trailing 12-month profitability will be kept at bay. All things considered, I am changing my rating to a buy, okay? So, yeah, I think he made some definitely compelling points there, and I think the main one kind of around his trust in regards to the management team and things like that, okay? So, the one thing I think this gentleman missed, and I think everybody's missing in regards to Palantir, this is the one thing I think everybody's missing right now. If this company really has this crazy demand right now, where everybody and their grandma is looking at this company, right? And they start blowing away revenue expectations, which analysts have them doing like 12, 15% type, sleepy type growth rates for a company like Palantir, right? If they start blowing away those numbers, I can tell you that net income is going to fly a lot more than a lot of people are anticipating. And that's going to obviously change the way you're going to value this company in a very, very substantial way. And I think that's the one thing that I think is the most overlooked thing out there right now, because Palantir could very easily over the next 12 months eat so fast in terms of that net income that a lot of people start to look at the stock and say, oh my gosh, can you believe when it was only XYZ market cap that was so cheap? Because look at the type of net incomes this company's starting to throw off on a quarterly basis. That's what happened with Tesla. That's what happens with great growth companies. They have these massive epic moves in their earnings per share, and you begin to look at a stock that you thought was so expensive. You thought it was so expensive. And you realize, oh my gosh, when I thought it was expensive, it was dirt cheap. And so, it's not in the bag, but I think there's a decent probability this is a situation that's going to play out here in Palantir. And we'll just have to see, okay?